All right, we are back answering your tax-related questions. Ryan, this person says, I lived in 2 states last year. I only worked in 1 state, though, for 2 months. Do I need to file taxes with both states?
So yeah, I mean, if you lived in 2 states and you only worked in one, then you're just going to file a tax return in one state. However, that is still going to be what's called a part year tax return. When you move in between states in 1 year, you literally file a state tax return for the time period in which you were in that first state, and then another part year state return for the time period you were in the second state. So if you only worked in one, then you're just filing one part year return versus two.
Okay. Laura, this person's asking, do you get a refund if your only income is Social Security?
Well, if that's your only income, you're not required to file, so you didn't pay in any taxes, so that's a no.
Okay, if that is your only income, you don't have to file taxes, and you will not get a refund because you are not filing taxes. If that's your only income. If you have any other income, though, that may change that. All right, Ryan, this person says, my husband and I are both 63. He started drawing Social Security. I'm still working. We usually file jointly. Do we need to claim his Social Security? Do we need to file separately?
Okay, so number one, does Social Security need to go on the tax return? Yes, that is why they send you a 1099 SSA. So you do need to put that on a tax return. Now, how to file a tax return, married filing joint versus married filing separate, whichever one gives you the best possible tax answer. There's no requirement that you have to do one or the other. You can do either, whichever one, like I said, gives you the best tax answer. So just run it both ways, see how it works out, and file that way.
Okay, yeah, run it both ways and just see which one gives you the better deal there. And so again, the sticking point is Social Security is income. If it's your only income, you don't file taxes, but if you have other income, you have to include it as income. Okay, gotcha. All right, so Laura, this person is asking, my brother is 57 years old. He does not work. I pay for his medicine and doctor bills. Can I claim him on my taxes as a dependent?
Absolutely, you can claim him as another dependent on the tax return and get some credit for him.
Okay, and that is like almost near the top of the tax form of where you would do that, correct?
Correct.
Okay, we have another dependent question. This person, Ryan, says, if my husband is retired and doesn't work but I do I file and claim him as a dependent, or do I file without him, or how do we do this?
So if you're married to that individual, you're going to file a married filing joint tax return, and he is going to be listed on that tax return. And because he is on that tax return, you're going to get a higher standard deduction, which is exactly what you want versus married filing separate. So by all means, in that situation, I would suggest filing jointly.
Okay, all right. Laura, someone says, can I take the home office deduction if I do work from home?
Well, it depends. If you're an independent contractor, then you potentially could. If you're working and you're an employee of a company, then chances are that is no.
Okay, so you can't like itemize that out or anything?
No.
For the chair that you bought or any of that kind of stuff, unless you're an independent contractor. Okay, good to know. All right, what about this, Ryan? Is money received from the sale of inherited property considered taxable income? Like someone, left you the house and you sold the house?
All right, so whether it's taxable income is going to depend upon whether or not it's a gain on your tax return. So inheriting a house inside of itself is not necessarily a taxable event. However, let's say when you go to sell that house, well, the value of it is the value as of the time in which that person passed away. So I'm going to use round numbers. If they passed away and the value of it was $100,000 and you sell it for $100,000, no taxes, but you do have to report it on your tax return. If you sell it for $120,000 and there's a $20,000 gain, you're going to pay taxes on $20,000. If you sell it for $80,000, now there's a $20,000 loss, you get to claim that loss on your tax return.
Okay, and there's also that whole thing of like you can also claim gambling losses on your tax return. That's true too, yes?
Only to the extent of your gambling winnings.
Only to the extent of your gambling winnings. Got it. Okay, got it. All right, and Ryan, how do you answer this question? Should I itemize or should I take the standard deduction?
At the end of the day, whatever gives you the best answer. So if the standard deduction is more than your itemized deductions, then by all means take the standard deduction. No harm, no foul in doing that. If your itemized deductions end up higher than your standard deduction, then you better root and toot and take your itemized deductions.
Okay. All right. And Laura, as we go, we want to remind people that, again, tax day is April the 15th. If they owe money and they file an extension on April 15th, does that mean that they get to extend when they get to pay?
Absolutely not. There will be penalties and interest tackled to whatever amount that they owe. So that's why we recommend go ahead and file by April 15th. If you owe, go ahead and pay it off by April 15th.
Yeah, you don't want any kind of like fines or anything from the IRS. That's never a good thing. All right. Both of you, thank you so much for your time and your expertise. We will, of course, do this again as we get closer and closer to tax time. If you missed any of it, it's going to be in the Two Wants to Know section.